This isn't the world you grew up in. You've become an expert in areas of the business that go well beyond tax. Your organization is more global, increasingly digital. Your business models are more complex. Compliance is getting complicated, and penalties are more severe. Governments around the world have moved towards taxes that are easier to collect and administer through technology. Suddenly, your board wants to hear from you about risks and opportunities, and you're not the tax leader you were when you started out. You know how to transform your tax data into meaningful insights. And if you're anything like the other ambitious, future-thinking tax leaders out there, you've managed to do all of this with fewer resources and less budget. Maybe these tools still feel disconnected from one another. Not anymore. Introducing KPMG Digital Gateway, the single platform solution that gives you access to the full suite of KPMG tax and legal technologies you use. Across our global network, we are investing $5 billion over 5 years in technology, people, and innovation to accelerate the digital transformation of KPMG firms and our clients, and more than $1 billion in tax and legal technology specifically in that period. KPMG Digital Gateway puts the fruit of our investments at your fingertips, bringing together the expertise of alliances, technology solutions, and the KPMG global network of professionals into one integrated platform. Putting our investments in machine learning, deep analytics, visualizations, and AI technologies in one place, all driven by the rich data you already have on hand, powered by Microsoft Azure, built on the cloud. KPMG Digital Gateway and the teams behind the solutions are working together to help change the lives of tax leaders and their teams, redefining target operating models and transforming tax functions for the new world order. You've done so much already. Just imagine what the future of tax will be with a platform like this behind you.
Tax is being reimagined for today's world, a world that has changed dramatically. Geopolitical shifts, technological innovation, globalization, new business and consumer demands. These trends are transforming the way tax leaders are thinking about tax. And businesses tell us they spend more on annual tax compliance than on their annual audit. The old country-by-country, tax-by-tax approach no longer works. Businesses increasingly want a strategic relationship with a partner who can travel the journey with them to a new target operating model for their tax and finance functions. A model that is digital, global, efficient, and effective in unlocking strategic value. Welcome to Tax Reimagined, a new framework which brings together our tax knowledge and transformation skills, our leading technologies and our expertise in delivery across the world to meet the new demands businesses face. This is not a one-size-fits-all approach. It's about deploying skilled solution architects that can work with you to design, implement, and continuously improve the target operating model, and aligns your tax department's vision and strategy with the broader business objectives, from in-house automation to outsourced managed service solutions. This teamwork is a platform for reimagining the future of tax. KPMG is investing collectively and is committed to innovation and developing our suite of tax technology solutions, training 10,000 of our tax professionals to become experts in technology and solution architecture, building best-in-class regional delivery centers and consistent global delivery standards. By acting collectively and acting now, the future of tax is here.
learn on the go and stay informed. Our goal is to keep the average user informed and up to date with relevant tax information. For the entrepreneur and investor, getting acquainted with tax laws and regulations could be quite daunting. Well, not anymore. Introducing the KPMG Tax Mobile App, where you can access all tax-related news, laws, and insights in one place. Also, calculating personal income taxes has never been quicker. To get the app, simply search for KPMG Nigeria Tax on Google Play Store or iOS Store and install. Once installed, quickly do a one-time sign-up on the application to access a constantly updated library of news, laws, and articles alongside easy-to-use tools. The KPMG Tax Mobile App has a minimalist design, making it effortless to use and navigate. What's more, if you can't find what you need, asking a professional is as fast as it gets. Let's walk you through the application. The full menu is accessible from the left and helps you jump to any part of the application in seconds. Access fresh tax news by clicking on the news icon. The seamless scroll makes it simple to view all news at a glance. You have news you've already seen and want to go back to? Just search. Expand or share each news item to your friends with the dedicated buttons. Adjust your news preference easily from the settings icon and tailor your content. We have embedded tax legislation and popular cases in our tax laws section. Are you eager to know more about taxation in Nigeria? KPMG Tax App has more than enough for you. Stay on the cutting edge of industry updates with insights features. The new app brings together alerts, newsletters, articles and publications from industry-leading KPMG professionals. You don't have to worry about missing important regulatory dates and other notable events. The notable date feature brings them all into one place in a calendar or list, however you want to view them. For the average employee, entrepreneur or business person, KPMG Tax App has another important feature, the PIT calculator. Plug and play, simple as it gets. Input the required numbers and calculate your taxes. Also, the app has jokes and valuable tips. Check in to learn something new and fun. Still feel there's more to know? We've got your back. Ask an expert and get quick, insightful responses from KPMG professionals when in doubt. Learn more from various authorities through recommended links in the external links tab. Read all about us to find out more about KPMG's service offerings, our responsible tax principles, and disclaimer. It's now a breeze to connect with us online. Just click on the link icon on the homepage to get to us on social media. KPMG Tax App, connecting with you on the go.
Good morning, everyone. I hope we're all doing good. My name is Ike Chukwu, and you're welcome to KPMG's webinar on Tax Function of the Future, Pathway for Nigerian Companies. This is a 2.5-hour session. The first hour would cover about 3 presentations that would cover global trends in tax function transformation, Nigerian tax authorities, what they are really doing about what is happening globally, what you need to be doing as a tax function to get ready for the future. The second hour will cover panel discussions around opportunities and challenges of automated tax administration in Nigeria. Afterwards, there will be Q&A. and then we would have launching of a tax survey report that we've been working on for some time now. Just to ensure that we have a seamless meeting or webinar. Just a few ground rules. Please, as a participant, if you need to ask any questions, just type it into the chat box. We would collate and bring it to the presenters or to the relevant people during the Q&A. For the panelists, if you're not presenting, please mute your mic and turn off your videos just to help us spotlight the people that are presenting at each particular time. And then for presenters, please, if you need control to make your presentation, let us know. We will share control with you at the appropriate time. Just so that you also know that as this session is going out, is going on rather, there is also a Twitter session that will be tweeting things that we are discussing here. And just in case you need to follow that, you can follow that through hashtag tax function of the future. We would also record this session for documentation purpose. So without taking much time, I would like us to kickstart because we have a lot of things to talk about today. So I would start the first session. I'll start the first session by introducing the first facilitator, Nike James. Nike James is a partner in our tax division. She heads the FSI, Deal Advisory, and M&A. I wouldn't do much in introducing her. I'm sure many of us know her already. So, Nike, good morning and welcome to the session.
Thank you very much, Ike, and good morning, everyone. I'd like to say a very warm welcome to everyone present on this webinar. You know, and in giving this opening remarks, I think it's a great pleasure also to really welcome us into the webinar. Ike has given us the title. It is the tax function of the future, and with particular focus on the pathway for Nigerian companies. I'm sure a lot of you would agree with me that a topic of this nature has become imperative, given that the traditional tax department function is undergoing a transformation. And this is in response to the constantly evolving business, economic, technological, and social political developments, as well as the sweeping changes in the legislative and regulatory landscapes globally. As a result, our tax functions can no longer carry on as in the past. Our tax departments need to be compliant, and they must be ready for the changing digital future of tomorrow. We are aware that going forward, greater emphasis is going to be placed on the use of data, data mining, automation, digitization of tax systems, and how technology can be deployed most effectively. So a key focus will be to design a tax function to meet today's demands and the challenges of the future. So just imagine the possibility of designing a tax compliance process without limits that automatically performs certain tasks, eliminates manual data inputs, runs calculations in real time, and can transmit data to tax regulators almost simultaneously. Technology is making this a possibility, and tax regulators around the world are embracing this as a new frontier in tax administration. And we dare say, for our Nigerian companies, the future is already emerging. Given some of the recent tax amendments introduced in Nigeria through the Finance Act, we are aware that the FRS has begun the process to deploy an automated tax administration solution to access electronically the transaction data of taxpayers stored in computers, electronic devices, and in the cloud for the purpose of assessing the adequacy of tax treatment of those transactions. Therefore, having a future-ready tax function with digitized tax systems is no longer an option, but a key imperative for every company that is doing business. As we have shared, as has been shared with us by the moderator, we will be doing a deep dive into this topic, and we'll be sharing with you global trends in tax function transformation. We'll also be hearing from FRS on its vision and its plans in automating tax administration. We will be sharing key considerations for getting your tax function future ready as well as a host of other related discussions over the course of the 2.5 hours. So on this note, in concluding my opening remarks, I welcome everyone once again to this webinar. Our esteemed welcome goes to our distinguished speakers, the FRS Executive Chairman, Mohammed Nami. You are welcome. Also to KPMG's Head of Tax Reimagined for the EMA region, Jay Artin. Welcome. And to KPMG's Head of Tax for Africa and Nigeria, Wole Obayomi. Welcome to you. And to our esteemed panelists, our other contributors, our valuable participants joining in this webinar, we say a warm welcome to every one of you. At the end of this webinar, we hope you will be taking away knowledge that enables you to decide on the pathway to future-proof your tax function. So thank you very much, and please have an enjoyable 2.5 session as we go into the webinar proper. So over to you, IK.
Thank you very much, Nike. That was a good appetizer to launch us straight into what we are here to do today. Like Nike said, we will be hearing from 3 keynote speakers. Jay Artin, our Executive Chairman from the FIRS, and then the Head of Tax of KPMG Nigeria. So our next presentation would be by Jay Artin on global trends in tax function transformation. And it will be delivered, within the next few minutes. Jay Artin is a partner in KPMG UK, and he's also head of our EMA region in Tax Reimagined. Jay, good morning and welcome to the webinar.
Good morning, everyone. As Anna said, I'm Jay Artin. I'm really pleased to be here, and thank you for making the time to join the session. I'd like to use the next 15 minutes or so to just share my perspectives on what we are seeing in the area of global trends in tax functions, both from a regulatory perspective, but also in terms of how companies are approaching this. So let me start with kind of, if we go over to kind of the next slide, let me start with just sharing kind of my perspective on what the external environment looks like first. So if I step back from this, it's no secret that tax functions are continuing to grapple with new challenges. And these challenges are focused on trying to balance how companies stay compliant, but also take a forward-looking risk and effectiveness focus. So what I want to explore with you on this slide is a few of the external challenges or disruptors we are seeing in the market. I'm not going to go in order, kind of just starting first. I'd say the first piece I'd go is kind of on the right, the regulatory pressure and the digital capability of tax authorities is continuing to evolve. Regulators in countries kind of across the world, Brazil, Spain, Italy, African countries, are starting to change their approach to how they look at tax returns and moving to much more of a real-time basis for calculating taxes. So this is changing the focus of how kind of taxpayers are submitting their tax returns. And this in turn, if I move to one of the other pillars, is raising the bar on the level of confidence which companies need to have in their data. So companies can no longer retrospectively clean up their data, but are expected to get their data right first time. And we are seeing companies moving to kind of e-filing requirements, standard audit files, and e-invoicing. So quite a lot of change in terms of kind of how the regulators are approaching filings, which also aligns with the continuous change we are seeing from a legislative perspective. There are common trends and changes around areas like transfer pricing, but if I kind of, from my experience, look across some of the African area countries as well, kind of you've got limitation in incentives, e.g. laws to review favorable conventions in countries like Congo. And to me, the most important one, which is kind of tax audits starting to focus more on compliance with local GAAP requirements. So quite a lot of change from a regulatory perspective, quite a lot of change from a legislative perspective. When we bring this together, you think about kind of what's the social impact of this. Companies are starting to rethink what their team should look like. It's not just about the technical capability, but also being much more technology enabled. skills in their team, more process-focused, controls-focused, and program management type skills in the tax team. So the makeup of the tax function is also starting to evolve and change from what it was in the past. And the last piece is, as kind of companies continue to evolve how they operate, we are seeing more companies move to a more centralized center of excellence type structure. So that's starting to impact how tax functions think about how they are structured as well. How do they use their shadowed finance function? How do they devolve some responsibility to the finance organization, but retain overall accountability for taxes? So I think in summary, what I'd say is my observation here is kind of things are changing and changing very quickly, both from a regulatory perspective, but also from an operating model perspective. And I think that's forcing companies to kind of start think about how they manage their tax in a different way. If we move on to the second slide, kind of that just continues on the same theme, which is how global tax administrations are digitizing their approach. And to me, this slide kind of is a really good example of how that approach has continued to evolve. So if you go down level 1 down to level 5, kind of level 1 and 2 was very much around e-filing and e-accounting. So use of standardized electronic forms to file returns and additional data, whether it's tax data or accounting data. As we move to kind of level 3 and 4, we're seeing kind of regulators and other authorities looking for submissions of additional accounting and source data in an electronic format, and the ability to start kind of comparing data across different companies or across different kind of businesses or sector lines. So it's moving to a model where there's more of e-matching or e-audit of data, not just electronic filing of data. And as we continue to move down that kind of spectrum, you've got kind of what we've called ESS, which is kind of government authorities using submitted data to assess the tax liability of companies based on their electronic submissions. So not doing this manually, but almost using that data to assess what a company's tax liability is. So what you're seeing there is a significant paradigm shift in terms of how some tax authorities are approaching the digitization of the tax administration within their countries. And what is clear is tax authorities are investing significantly in this, but more importantly, looking to partner and work closely with businesses and with advisors to make sure that the ultimate objective of reducing the tax administration burden on companies is managed effectively. So to me, this is a great example of how kind of tax authorities globally are evolving, and actually tax functions are also maturing to deal with this changing tax function of the future. So that I'll pause there. So that's kind of very much around the external perspective. If I move on to the next slide, kind of with all of this happening, companies are starting to think about what their tax function should look like. And what this slide is trying to set out is almost an overview of how companies would typically benchmark their tax function, but more importantly, use that as a basis for determining where they should focus their effort. And that last bit is quite important, because what I'm finding when I speak to kind of heads of tax and CFOs of some of these companies is that they are increasingly thinking through what the impact of increased compliance requirements are, what the impact of increasing challenges around data quality and data access are, and how they can access this technology in the most effective way. So they really want to think through these issues on this page, or these benchmarks on this page, to determine where they should put their focus on from a tax function. And there's no one size fits all. Kind of different tax functions are of different sizes, and they may have different priorities. But if I pick 2 or 3 of the kind of key themes coming out of this page, there's clearly an increased focus on areas like governance and risk, more and more countries are starting to think through and ask taxpayers to not only document, but also publish their tax strategy. And following on from that, there is kind of an expectation that those companies are able to demonstrate that their tax policy has been embedded effectively within not just the tax operations, but the business as a whole. So the piece around governance and risk is important. If I move on to process and controls, kind of to me, that's another area where companies are focusing, kind of what is the right split of responsibilities between various stakeholders in the tax and finance function, who does what, can it be done in the most effective way, and are we avoiding things like duplication of effort in the right? So moving to a much more kind of controls-based environment and a more process-documented approach is definitely something which companies are striving to do. And lastly, performance management. So kind of what does the tax function look like from a people, performance and training perspective? How do we continue to skill up our tax function to be able to cover a range of things rather than just the tax technical component of what tax functions used to do? And how do we evolve that tax function? So that whole performance piece is really close, is keeping a number of heads of tax kind of awake at night in terms of what the shape of that tax function looks like going forward. So these are just some examples of what companies are looking at. Kind of, we've set out that page intentionally in a way where companies can start thinking about both where they are, which is on the left, but also where they want to get to. What does good look like? I mean, for me, the important aspect of this is not about getting to the right-hand side of this page for all 7 components. It's about determining what are your priorities as a tax function, what are the external factors which are impacting your business and your tax operations, and how do you decide that actually there are 2 or 3 things here which are more important for you to focus on and develop a plan across, rather than necessarily trying to develop an ambitious plan across all of these areas. So hopefully food for thought in terms of things to think through as you reflect on the changing tax environment and what this means for your tax and finance organization. Which then takes me on to the last slide I wanted to cover, which is, having talked these things through, I think, to me, often companies kind of ask me the question, where do we start? And what's the framework we use for this? And what we have here is a relatively simple framework, which looks at taking a much more holistic approach to transforming, or as we refer to it, as reimagining a company's tax function. So it's very much around developing a future state model, which helps manage quality, unlock value, and focus on making sure you're compliant for the future. The starting point for us is pretty much the strategy. So it starts at kind of re-looking at the strategy. More and more companies are finding that the only way they can manage their tax effectively is to do this on a regional or global basis. It's no longer just jurisdictional focused. Yes, you need to be compliant locally, but as multinationals think about their strategy, they need to think about it from a local and global perspective. And therefore, getting that strategy right is critical. For us, there are 3 pillars to the strategy. The first pillar is around what's the right sourcing model. This is not just about whether you do something in-house or outsource it. It's also about thinking within the organization, who's best to do it. Are some activities best done in the finance function? Are some things best done in the tax function? How do you define roles and responsibilities clearly? And how do we make sure we're being efficient in how we do this? So sourcing is much broader than just insourced or outsourced. The second pillar on the right is operationalizing this change through better processes, better technology, better controls. So once you've decided on your model, once you've decided on your strategy, this is about making sure it's being operationalized effectively. And then the third piece is around the performance of the tax function. And how do you assess the performance of that tax function vis-a-vis its contribution to the business? And this, in my experience, is a challenging area because, to me, I always say kind of the tax function is not a cost center. It's not just about the cost of the tax function. It's the value it generates for the organization. And that value could be in a number of ways. It's compliance with local regulations. It's making sure you're doing the right thing around maximizing incentives and acting in a socially responsible way as well. So more and more tax functions are thinking long and hard about what are the right KPIs to assess the performance of the tax function. And as importantly, once that's defined, how do we create the right framework, the right structure, and the right mechanism to identify the right people in the organization and give them a clear training and career path. So when you bring all of this together, setting the strategy supported by the right sourcing, operations, and performance pillars really helps a company think through how best to deal with this changing tax environment and set themselves up right for the future. I think the last thought I'd leave you with is what we find is that kind of the more experienced, the more mature companies are ones who've taken this more holistic approach rather than take a point solution approach. So this is not about saying kind of the answer to my one problem is I'll buy this technology, the answer to my other problem is X. It's about standing back and saying, let's set our strategy, let's develop the framework right, and then let's focus on addressing some of the key areas for our business. So this more holistic approach is the one which is helping companies establish the foundation to move towards kind of becoming a much more sustainable tax function for the future. So in summary, kind of as we kind of move to the last slide, I'd probably say huge amount happening in the external environment, both from an operational perspective and a regulatory perspective, much more collaboration between tax authorities and taxpayers. And what this is leading to is really a need for tax functions to just step back and think long and hard about how they can set themselves up to be a much more holistic and sustainable tax function for the future. With this, I'll kind of hand back, but happy to take questions both in the chat or later on as we get into the Q&A. So thank you very much for your time, and hope you found that helpful.
Wow.
Yeah.
Thank you very much, Jay. That was quite insightful. For those listening, Jay talked about things happening globally, things are changing very quickly, and you need to, move with the trend. You need to carry out a tax function assessment, look at where you are and ask yourself where you want to be. You need to look at your strategy, your sourcing, operations, and even performance for the tax or your tax department. So I think we'll move straight into the next presentation. The next presentation will be done by no other person than the executive chairman of the FIRS, and the presentation is on the future ready tax administration transformation, FIRS's vision and plans. I'm sure you would enjoy this presentation because this is something that's hitting taxpayers straight in the face right now. Good morning, sir, and welcome to KPMG webinar.
Thank you, my brother. How are you today?
I'm very well, sir. Thank you.
Thank you. Good morning to the managing partner. I know even if it's not on board, I have to give him that respect of KPMG and my big brother, Mr. Wole Obayomi, Nike, and the rest, distinguished guests, ladies and gentlemen. Thank you very much for giving me the opportunity to make or to share with us what we are doing at FIRS in terms of the future ready tax administration transformation, the FIRS vision and plan. I have a very short one in order to be able to respect the time given to us to be able to share this with you. And I started with a slide which have a small introduction on tax administration and the issues of digital age, what our visions are for a digitalized future, and what we are currently doing and what we plan to do, and a slide on conclusion. I started by drawing our attention to what Nikki have said, and the speaker before me, Mr. J. Harrington, that dynamic tax environment demands dynamic tax administration. This is because the business process continue to change, and so also the tax administration processes must key into the changes that digital economy is unveiling. The next slide that I want to share is on tax administration, the challenges that we're confronted with globally, particularly on as far as digitalization is concerned, where in our economic processes, transactions, and activities are performed through digital means, so that the before now business model, which is comprising of a physical brick and mortar expression whereby you buy goods from the open market to now that you order goods online from your house, is gradually disappearing. So the route ahead is characterized by invisibility, mobility, and speed, as businesses today leverage on advanced information and communication technology. So we also decided to remind ourselves of the evolution of digitalization since 1986. By the time we were some of us were in university, I don't know, Mr. Wale, it's only 1% of global information that were digitally stored as at 1986. But in a very rapid transformation manner, by the year 2002, 50% of global information were stored in digital form. And by the year 2020, which also coincided, which was also characterized by negative impact of COVID-19, there are over 22 billion Internet of Things, which is to say approximately me, Mr. Bojibola in my office, Wole Obayomi, and Nikki J. All of us have at least 3 Internet of Things devices for each of us. By the year 2030, it is expected or estimated that over 60% of our global GDP and 70% of the new economic value to be created will be based on digitally enabled platform. In this manner, an analog tax administration surely will be useless in a digital age, particularly by the year 2030. Indisputably, the future of tax administration lies on what we are discussing today, which is digitalization. So what is digitalization vision of FIRS? Our own vision is to build a data-centric organization, which means we want to now rely totally on data for everything we do in FIRS in terms of tax administration, be it taxpayer profiling, taxpayer management, compliance enforcement, and corporate management. Our transformation vision involves, one, we want to build a robust, seamless connectivity with stakeholders for data gathering, be it back-end engagement. Back-end engagement is currently ongoing with relevant government agencies for data exchange. We also have deployed proprietary solutions to automate registration, returns filing, assessment and payment, compliance, and enforcement functions. We are also currently transitioning from manual corporate administration processes to fully automated regime with electronic document management system for human resource management, procurement, and record keeping. What are we doing to digitalize FIRS operations? Tax is essentially a matter of law, as we all know, and government is currently adopting incremental approach to legislative changes required for full declaration of tax administration at FIRS. The first thing we have done in 2020 Finance Act is to have government giving us power to deploy proprietary technology to automate the tax administration process, which include, but not limited to, assessment, information gathering, provided it gives, we at FI give taxpayers 30 days notice in line with Section 25, subsection 4 of Federal Inland Revenue Establishment Act. Finance Act 2021 may include provisions on digitalization of specific tax processes for clarity and ease of compliance. So the foundation has been laid by the Finance 2020, which has given us power to deploy proprietary technology. But we intend to go a step further in order to provide specific provisions that will take care of tax process for clarity and ease of compliance. The objective of this of our FIRS digitalization project is to ensure that we achieve three basic objectives, principle, that we should be able to provide opportunity for taxpayers to be able to easily comply with the tax laws, particularly when it comes to registration and for taxes and for getting TIN. What we have done now is at the point the company is registering a business, an investor is registering his company with CAC. CAC automatically generate tax identification number and includes that number on the face of the registration certificate. Returns filing also, payment and to make correspondence was also easy. And to ensure transparency in whatever we do, so that you have direct access to FIS services, and we should be able to, our rules and processes should be open, and we're able to get feedback from you using our feedback channels, and ease of tax administration, data-driven processes to reduce cost of compliance administration, and to ensure that we easily resolve disputes that are inevitable in the course of tax compliance, and the speedy way of resolving such dispute also. The strategies we have adopted, we have 5 strategies we have adopted to be able to achieve that objective, which is one is tax operations, to ensure that we provide a platform for easy e-registration, e-filing, e-tax receipt, and computer, among others, including computer-assisted tax administration. Another strategy is to automate VAT registration and compliance, so that we're able to simplify VAT compliance tool for non-residents, registration, filing, and payment, and also online VAT returns and VAT auto-collect domestic for aviation, power, telecommunication, e-commerce, etc. Then another strategy is to provide payment channels, which are flexible payment platform for ease of tax payment in collaboration with payment gateways, collaboration with financial institutions, and we're also exploring applications on mobile phones for tax payment. Tax intelligence is another strategy, which we are doing jointly with JTB. And recently, we also have brought in the initiative from the state so that going forward, we are going to rely heavily on data for tax administration. Integration with stakeholders such as CAC, like I have explained before, Customs, CBN, and we are also collaborating with SEC, EFCC, and ICPC. Then we also want to internalize data-driven risk profiling for compliance and enforcement. Tax information is the last of the 5 strategies which we are trying to explore through, or we are exploring through social media scoping, e.g. exploit of social media for tax valuable tax information. Through that, we're able also to communicate and enlighten taxpayers, match taxpayers' profiles on social media with tax profile. What are the FRS ongoing digitalization initiatives? You are all aware that we have come up with our own proprietary tax administrative solution, which is FRS in-house flagship solution for end-to-end tax administration, which is Taxpro. This is currently live in almost 200 tax offices nationwide, to cater for e-registration, e-receipt, and ETCC. That has been live since June 2020. On e-filing and e-payment for VAT, that has been live since September 2020. For e-filing and e-payment for CIT, it's already live since December 2020. So we have now gone a step further to automate utilization of credit notes, which has also come to life in January 2021. So what are the success stories? What are the scorecard for the Taxpro? As at 13th May 2021, in terms of e-registration, we are able to achieve 155,201, and then we'll move because of time to ETCC. We have ETCC request of about 55,976, and we have issued 45,691 as at December 2020. But we've moved a step further, that from January 2020 to 30 May 2021, we've received requests for TCC totaling 61,608, and in just less than 5 months, we'll be able to issue about 45,211. So what are the challenges facing the challenges of digitalizing tax administration in Nigeria? The first that should be on everybody's lips is funding. In as much as you want to achieve a lot of things and to make compliance easy, you need a lot of capital, and that we do not currently have. But we are working with our supervisory ministry to see what we can do to improve that. Another key issue is human capital capacity, our staff capacity. So we are also working with professional organizations, international organizations like ETAF, OECD, to ensure that we bridge the gap as far as human capacity issues are concerned. Then the one that is closely related is the behavioral changes and inadequate tax literacy. In some quarters, as far as you all know, globally, nobody wants to pay tax. So we have that problem. People know the position of the law, but they're finding it difficult to comply with the rules they comply with the laws and provision, tax provision, so that taxes that probably they collect from taxpayers, e.g., maybe the supermarket or the stamp duty, that are deducted automatically and without any giving you any chance. When they're deducted, they are not timely remitted to give money to government to implement its budgetary requirement. There is also lack of literacy, lack proper knowledge of the tax provisions. Though we're currently doing that, like I said, with the taxpayer, through the taxpayer services department, and we are going to be able to automate even the process so that when you have questions, you can ask, and electronically the inquiry or whatever you want will surely be attended to. So there is also trust deficit and statutory constraint. The trust deficit is a big one, and I think is the second biggest problem after the behavioral challenges that we face currently. Government is not trusted with tax. The taxpayers do not trust government, and the agent of collections also cannot be trusted by the government itself, because when you collect on behalf of government as an agent of collection, you find it difficult to remit. So there are also statutory constraints, e.g. on the VAT, when we are saying used proprietary technology to do tax administration, to carry out tax administration, but you have a provision that said a taxpayer has the right to keep the money up to 21st of the month following the transaction. So these are issues that we're looking at with our supervisory ministry. In conclusion, it's just a simple message to say, in order to build the society we desperately desire, there will be need for all of us to make sacrifices. The sacrifice certainly starts only when we have fulfilled all civil obligations, beginning from tax compliance. All of us of Nigeria must come together to demand compliance with tax obligation, and through that, government is able to provide critical infrastructure that you require. It is able to provide the social amenities you require, and is able to secure your lives as it is done in other places that we all visit on daily basis. And then we can talk of sacrifice that are required to achieve our desires. Thank you very much.
Thank you very much, Mr. Chairman. Thank you for sharing your thoughts, and thank you for sharing the vision of the FIRS. To the participants, now that you have heard the tax authorities, I'm sure that what is going through your mind is, what do you do as a taxpayer? But not to worry, our next presentation is on key drivers and considerations for a future-ready tax function in Nigeria. And this presentation will be handled by no other than Wole Obayomi. Wole Obayomi is the tax partner and head of our TRPS division in KPMG Nigeria. Good morning, Wole, and welcome to the webinar.
Thank you very much, Ikechukwu, and good morning to all our delegates. Thank you for joining us at this important webinar, and I hope you're all keeping well and safe as well. I want to pay tribute to the first two speakers before me, because they have in no small way made my job easier by laying the foundation for what I'm going to be talking about. And I want to sincerely and especially thank the Executive Chairman of the Federal Land Revenue Service, Mr. Muhammad Nami, for always honoring our invitations. And at an occasion like this, it's so important that we hear from the FRS. And it's also good that it came from him directly as the boss of the Federal Land Revenue Service in Nigeria. Now that he has unfolded what the vision and the plans of the FRS is in terms of how they are transforming, the question for the taxpayer is really, it's not really about having a choice as to transforming, but it's how far you want to go and how quickly you need to go. And I'll just take you through some of the key drivers and considerations for a future-ready tax function that should make it really compelling, for you to review your tax function and then determine what you need to do in order to make yourself future-ready. So in outline, I'll be taking through the following: evolution of tax function and tax practice in Nigeria, which is just about history in terms of how we got to where we are today. And then the drivers of future-ready tax function in terms of the global trends and the domestic forces that are making the need for future-ready tax function to be inevitable. And I'll take you through the reasons really why you really need to make this a front burner agenda in order to transform your tax function from where it currently is. And then look at the marks of a future-ready tax function. Some of this Jay had already touched on, and I'll just highlight a few, particularly in the context of the findings that we recently gathered through a tax function assessment survey that we conducted in Nigeria amongst taxpayers. The report that captures the results of the survey will be launched towards the end of this program today. And then look at next steps in terms of what you need to be doing in transforming your tax function. Next slide. Next. Okay, now, in reviewing the evolution of the tax function and tax practice in Nigeria, I split it into 3 waves. Wave 1 was pre-2000. At that time, only the multinational oil producing companies had tax functions in Nigeria. And of all the big firms in Nigeria then, our firm was the only firm that had the tax practice segregated from audit practice. And that's dated back since the early 80s, when the firm set up, soon after the firm set up in Nigeria. The other big firms, the tier 2 firms and local firms, had tax embedded in the audit practice. Wave 2 was from 2001 to 2005. So the multinational oil producing companies were then joined by the multinational oil service conglomerates, who again saw the need to have a tax function in Nigeria because they have a few oil service companies in the country, and it was necessary for them to have someone look after the domestic tax issues to ensure that their tax compliance was always up to date. Then the big firms, we had additional big firm making 2 firms that then also separated their tax practice from the audit function. But the other firms, and the tier 2 firms and local firms, still had their tax practice embedded in audit practice. And we had few local firms also coming up to set up tax practice, particularly as tax authorities in Nigeria were engaging local firms as tax consultants to conduct tax audits, and that was quite prevalent amongst the state internal revenue service authorities. Wave 3, we consider this started from 2006 and continued till now, where in addition to the multinational producing companies and multinational service conglomerates, we've had subsidiaries of multinational enterprises in Nigeria and significant Nigerian businesses across all sectors setting up proper tax functions. And it's quite common in the tax functions that these organizations have set up to actually have a few people there, rather than just one single individual. And at the same time, they also still co-source some of their tax services, such as tax audits or investigation or dispute resolution, and things like that, in order to ensure that the capacity within are able to focus on their priorities. And all the big firms, the tier 2 firms, now have a tax practice segregated from their audit practice. And of course, we are seeing increasing number of local firms with dedicated tax practice in the country. Now, all of these developments have been driven by the fact that we experienced oil revenue diminution from late 90s. That was when it started. I think oil price then was almost as low as $10 per barrel. And then government had challenges financing the budget. So the only area they could look to for revenue generation was tax. And so the tax authorities at the state level, became more aggressive. Same thing with the Federal Land Revenue Service as well. Up to the mid 90s, for instance, or even end of the 90s, FRS then primarily focused on issuing tax queries. Tax audits were limited, tax investigations were limited, but that became intensified as there was pressure on the tax authorities to collect more revenue in order to show up government finance. And then disruptive enforcement, quite common in the States with the closure of business premises to compel them to make tax payments or to file their returns. And then we saw escalation in tax disputes. And as these developments happened, businesses saw the need to strengthen the tax function, and then opportunities were also created for professional services firms to run full-fledged tax parties. Next. Now, again, times are changing. Make a thought about dynamic tax environment, same also with the chairman of the FRS. And we also see from what Jay Hutton also presented, that now there are forces that are driving the need for a future-ready tax function. Okay, so I'll look at a few factors at the global level and then see how this is filtering to the domestic environment in order to drive both tax administration reform and also the need for tax function transformation. The digitalization that's been well spoken about, where tax authorities are using technology to assess risk, drive enforcement, and boost collection. FRS has unfolded their plans with us, and we know that a couple of states too are also digitalizing as well in order to make the process of tax administration seamless. Again, globally, we've seen in the last few years a coalition against tax avoidance under the auspices of the OECD inclusive framework. I mean, the outcome of the award BEPS 01, a lot of the actions have been implemented to date. Another BEPS 02 is the legal debate on how to tax the digital economy. And now that's impacting the Nigerian domestic compliance environment through the increasing complexity that we are seeing by virtue of new compliance requirements, model after evolving global fiscal and regulatory framework that have been enacted in Nigeria. Okay, TP regulations started in Nigeria in 2012, and then in 2018, new regulations were introduced. CRS EOI about 2018 or thereabout, and then CBIC reporting regulations as well, which again are increasingly making compliance complex and more demanding, for tax functions in Nigeria. Again, making them to see the need, for them again to upgrade capacity of their tax department, both in terms of material and human resources. And then most recently is the unilateral action taken by the government on the digital economy with the significant economic presence order that was issued by the Minister Apportionment to Finance Act in 2019. That again impacts domestic businesses that are doing business with companies operating the digital economy, because they then have new compliance requirements that they have to observe. Again, globally, we're seeing civil society and media activism on fiscal responsibility, going to the extent of calling out taxpayers and challenging them in terms of their total tax contribution, that they are not paying enough. And of course, as they do this, there are tracks to brand and reputation management of these businesses. We don't currently have this in Nigeria yet, but it's imminent. I think it was last week, a guy circulated some data on the internet, in social media, comparing the tax paid by a manufacturing company or tax paid by a manufacturing company from its Q1 2021 trading results, which then came to 41 billion naira from a turnover of 332 billion naira. And compared to 7 banks with a combined turnover of 1.2 trillion naira in Q1 2021, and yet the tax payable by them was just roughly 42 billion. Again, that's the way it starts. Before again, focus and attention are turned on the taxpayers, and they're being called to question on the adequacy of the taxes that they are paying to the tax authorities. And then there's the environmental, society, and governance sustainability reporting regulation, particularly in the Western world, which again is driving taxpayer, which is driving taxpayer transparency and disclosure requirements on their total tax contribution. Also, we don't have a regulation on this yet in Nigeria. However, it's also coming again due to the activities and pressure from the civil society and social media in terms of how much tax businesses are paying, and the taxpayers in Nigeria need to pay attention to that. Next. COVID-19 pandemic, which we're still on, the global recession resulting from that and the impact on lives and livelihoods. Governments in Western nations ruled that massive stimulus measures that the US cost close to 2 trillion naira. And of course, at the end of the day, government has to make that up with higher taxes, post-COVID. And that should also be expected in Nigeria. That in our own case, even though government didn't quite roll out significant cash flows, they didn't have the cash to give to everyone. But with the oil price crash and the recession, following after that, there's a big revenue gap, and government had to resort to massive borrowing in order to finance budget deficits for the second year running. Now, that's going to put pressure on the tax authority for non-revenue generation, and at the end of the day, the pressure is going to be turned on taxpayers. So taxpayers should therefore expect more tax controversy, more disputes with tax authorities as they turn the heat on with a view to maximizing the revenue collection from them. So putting all this together, the global and domestic trends provide opportunity for tax function transformation to proactively manage their risk, drive efficiency, save costs, and add value to the entire business. And of course, the cost of non-compliance is just too high in terms of penalty, interest for late payment, even jail term as provided under Finance Act 2020 for even errors in filing tax returns. When the tax payable is understated, even if that happened innocently. And of course, the reputational risk that tax avoidance or any delinquency in complying with tax obligations to cause to businesses. So with all this, therefore, it's important for businesses to review their tax function and make it to be future-proof in order to be ready for the new developments that we are seeing in the fiscal space. Next. Now, what are the marks of a future-ready tax function? I will go through all this since Jay already had well articulated this in his presentation about the interplay of 7 components around which the future-ready tax function evolves. He did that when he reviewed the tax maturity assessment framework, and it's important that people pay attention to that as they begin to evaluate the readiness of their tax function for the future responsibilities. Next. So I've singled out 5 of these metrics for particularly with reference to the findings from a survey that we recently conducted on the tax function in Nigeria, so that people know generally where the market is. And then they need to look at their own specific situations and then do the right thing accordingly. Now, our survey, the report will soon be launched, 41% of the respondents, which included some of you here, indicated that they do not have an overarching governance policy that covers tax risk. And then 44% of the survey participants, said that tax is only on the board agenda when a significant tax event has occurred. Now, this is being reactive, but businesses actually need to be proactive in having a well-documented tax strategy to manage their tax risk accordingly. On data and information, this is so critical. The chairman of the FRS alluded to this, and so also was Jay in their presentations. Now, 77% of our survey respondents indicated that the data generated from the ERP system requires moderate to significant editing. And now, this is going to pose some problems because you may not have a chance to actually do any editing by the time the FRS is able to plug into your system, to automate collection of transaction data and assess you down the line. And then 29% of the respondents indicated that tax data is only used for preparation of tax returns. However, your data quality needs to get to a level where actually beyond preparation of tax returns, you can actually use it to provide insights for the business. And of course, for the quality and integrity of your data, there's in for close collaboration between the IT department and tax function so that the data coming out of the systems are actually fit for purpose. And that will require use of correct tax codes in order to nominate transactions on the system such that data generated will be used to provide valuable insights to the business. Then the third metric is systems and technology. And on this, 44% of the survey respondents indicated that their organization's tax strategy does not include the application of technology for tax processes. And what that actually means is that their tax processes are still largely manualized, or they're just basically using Excel spreadsheet, to do their tax work. And then about 50% of the respondents noted that the level of technology adoption in the tax function is lower than the level in other functions of the business. Again, that could be due to the fact that the business views tax function as a cost center rather than actually as a value creation center. And that needs to change. There's it to invest in technology to improve process efficiency and also optimize cost. And of course, if you have the appropriate technology, bespoke tax tools and engines, tax function should be able to optimize operations and then provide valuable insights that will contribute to the execution of the strategy of the business and then make it more competitive in the marketplace. Next on process and responsibility. Well, again, what we find in the survey is that 20% of the respondents said that they spend at least 40% of their time preparing tax returns, while 40% spend at least 21% of their time processing data for preparing tax returns. Again, this could be the outcome of the kind of technology that's in place or lack of technology at all in the way they run the tax function. And what this means is that tax professionals are still spending a significant amount of time on doing routine tasks, when actually, if they invest in appropriate technology, so the processes could be automated and then they can focus their time on more value-adding activities. But of course, again, it's up to them if you want to invest in such technology or you want to define an outsource service provider that already have the technology that can deliver the same results for them, at much cheaper cost. So a cost-benefit analysis needs to be done in order to determine whether you want to insource and invest in technology and you want to outsource your routine tax within the tax function. Then people and capability, 6% of the survey respondents indicated that their tax function is staffed by only accountants and in some cases lawyers. But actually, the world of tax is changing, with the tax function being staffed actually by professionals with IT skills and data analytics, and also statistics as well, because tax functions are now providing insights from their data, for businesses to use in order to advance their market objectives. And the tax function cannot afford to lag behind in that regard. So 86% of our respondents indicated that they are measured on accuracy of returns and avoidance of penalties, while 65% indicated that they are measured on identifying tax saving opportunities for the business. I mean, while this is all well and good, but actually tax professionals need to have more relevance to the business than just number crunching and getting correct tax figures for the business. By spending their time in more value-adding activities that provide insights that can actually help the business, in the marketplace. And of course, there's it for appropriate training in order to ensure that tax professionals within the tax function are future-ready, tax professionals, and then there is appropriate career plan in place for them, to actually also move up the ladder within the organization. So that will be necessary in order to ensure that you're able to retain high-quality professionals within your tax function, and then they will also support you in your journey to transforming your business. Next. So what should you be doing? You need to conduct a current state assessment to benchmark your tax function against the 7 metrics. Just looking at the framework that Jay showed to us on tax function maturity assessment. But again, it will depend on how far you want to go. There's no hard and fast rule. Every company needs to look at a specific situation and then determine what's appropriate for them to do in the circumstances. And then where there's need for help, then you need to engage subject matter experts who can help you to remediate your gaps. And then based on the plan that you have prepared, you then need a roadmap to ensure robust implementation and execution that will give you the results that will transform your tax function from where you are to where you should be and make you future ready for that purpose. Thank you very much.
Okay, thank you very much, Wole, for that impactful presentation. Ladies and gentlemen, we have now heard from the keynote speakers in this webinar. This marks the end of the first segment of the webinar. I'm sure you have a lot of questions in your mind that you may want to ask the presenters, but not to worry. After the next session, there will be opportunity for Q&A. So please type in your questions in the chat box. We'll collect the questions. So I will introduce the next session. It will be anchored by our one and only Femi Babem. Femi Babem is a partner in our tax consumer markets unit. So Femi will be anchoring the panel discussion that will be happening now, which will touch on opportunities and challenges in tax and automated administration. So Femi, over to you. Femi, can you hear me?
Yes, IK. Thank you very much. And let me say welcome to everyone that or every participant at the on this webinar. It's a very good opportunity for us to discuss the key issues that affect the tax function going forward. And in this session, we will be looking clearly at the opportunities and challenges of tax administration automation. We've heard from the chairman of the FRS earlier some of the initiatives the FRS is taking to automate tax administration in Nigeria. And so in this session, we've assembled a very deeply experienced set of panelists that would look at the issues around the automation drive by the tax authorities and how that impacts the tax function currently. And also talk a bit about, from their own practical experience, what should the FRS be considering and what companies should be considering as they look at automating their business going forward. So let me quickly introduce the panelists so that we can get into the session. So on the panelists representing the FRS, we have Mr. Matthew Olusanya Bonjubala. He is the coordinating director of Special Tax Operations Group. And that basically is the group that oversees oil and gas, emerging business, international tax, and some other aspects of the FRS. So he's well positioned, to actually deal with this topic. With him, we have Eleanor Adaralegbe. She's the VP Finance for Seplat. She has a very wide experience, or she's had a very deep experience also in finance. And in her current role, she oversees tax, payables, and all of that. So the oversight function over tax gives her, the right view and the position to also discuss the topic. And thirdly, I have Adebanji Adeni, who is the General Manager and CFO of GTB Bank. And we know that's, one of the foremost banks we have in Nigeria. And he's bringing his deep experience from consulting and from being in the industry, and will be able to share those perspectives with us here. And then fourth, we have Reynald Matthew, who is the head of tax global for Jumia Group. And Matthew has had a very long experience in e-commerce and digital transactions. So he's also going to share perspective from the digital space as we discuss the topics. So I will say welcome to all the panelists and to every participant as well. And we can jump right into it immediately. We'll start with the FRS. And just to discuss with Mr. Bonjubala, we know the FRS chairman during his presentation had talked about some of the initiatives that the FRS is driving to automate tax administration, and specifically he talked about Pro Max. And we also know that the FRS had introduced the VAT track, I think sometime last year. We want, just briefly, if you can maybe introduce these tools a bit more to the participants so that we understand in terms of how these tools are meant to work, what participants should know and should be aware of.
Thanks very much, Femi, and thanks all the colleagues on the call. As regards the Fastpro Max, which is one of these ICT solutions that we are providing in FRS to make compliance easy and also interesting for our taxpayers. It is a software that is developed to manage end-to-end administration of taxes, beginning with tax registration, filing of returns, raising of assessments, payment of taxes, and where need be, also part of the compliance and enforcement activity. So it is an end-to-end solution for managing all our taxes. We are hoping that by the time it is fully deployed across all our functions, taxpayers will not have any need at all to come physically to any of our offices for any of the businesses they want to do, apart from where there are needs for physical meetings or probably needs to carry out specific physical inspections. So in a nutshell, this is where I can introduce our Fastpro Max. Thank you.
Okay, what about the VAT track tool? Do you the VAT track tool that was launched last year?
Yeah, the VAT track is a specific suite for managing value-added tax, and it's also meant to be able to make life easy, particularly for businesses that are into fast-moving products where you have thousands of items. It helps you to manage, particularly on the issue where you have some items that are exempt from VAT or some items that are zero rated, and while some other items are fully liable to VAT. The VAT rack helps you to do this seamlessly without any struggle, even including the management of your input taxes. This is done. It is actually meant to make life a lot easier for people in retail selling, for example. It makes their life easy because we are going with VAT is being able to match all inputs with all outputs, particularly for domestically transacted items, where the input tax for one entity is the output tax for another entity. So where we are driving out, where we are getting to by the time we are done with VAT track, is to be able to match item by item. And so that makes it a lot easier to even prompt taxpayers that they where errors usually come and maybe due to human error, and some output taxes are not reported or some input taxes are not claimed. This is something that helps taxpayers to achieve all of this. So in essence, while the Fastpro Max is the omnibus suite for managing taxes from end to end up to compliance and enforcement, dispute resolution and all of that, audit, the VAT track is mainly to make life easy for filers of VAT. Back end, they are linked together so that, again, let me clarify that upfront. Back end, the two systems are linked together, so there will be no need to file on the two systems going forward when we are fully done. Thank you.
Okay, thank you very much. And I mean, it's good to hear that both systems are actually linked in the backend or at the backend, because it is important that the systems actually speak to each other to be sure that the data you have on this can be replicated on the other one as well. But just before we move to the next question, the VAT track, like you said, is it will help those who are trading basically. But are there plans to cascade this technology to other sectors of the economy, or we are only going to stay with manufacturing and then trade?
What we are trying to do with technology is flexibility. We know that businesses are diverse, and therefore their needs for tax compliance are also very diverse. And so what we are trying to do is to provide solutions to suit each segment of the tax-paying public. So if we consider it necessary, we may actually open it up to everyone. But first of all, we have a target, which once we are sure and we believe that the system is being tested and robust enough, and we believe there's a need to further open it up to make it accessible to other taxpayers, we will do.
Okay, all right, thank you. Well, before I leave you to the next participant, just one more question. From the initial, I mean, this is still early days for the technology, both for Pro Max and for Batrack. So these are still early days for both technologies. But part of the initial feedback that we've received, for example, for Pro Max, is the challenge in terms of how the system automatically determines what your tax liability is. So we understand that the Pro Max actually computes or determines what your VAT payable should be or your CIT payable should be, and doesn't allow you file a subsequent returns if what you filed in the previous month doesn't tally with what you have on the system. And in addition to that, then computes penalty for non-filing. So for taxpayers that have these sort of challenges, how is the FRS looking at addressing them?
Okay, thank you. I think one of the things that this system is trying to do is, number one, to help with compliance and also to maintain consistency. Now, it's a new system, just like you have said, which is evolving, and we have experts on ground who are continually listening to feedback from our users and making adjustments as need be. So one thing, first of all, I want to assure is that we have dedicated teams that are available to resolve issues. So if anybody has any issue, there are numbers, there are contacts for us to get across to. The second aspect of it is also the need for us as taxpayers in our compliance obligations to be very consistent. You know that one good or bad thing about technology is that while we human beings can forget, systems like this don't forget. So if you have put one, it remains one with it. You may be thinking, I mean, you may forget whether it is 11, but the computer will never forget. And so this is some of the things that this is teaching us how to be consistent in not just in what we present, but even in how we present it, so that we have not moved to the level of artificial intelligence, where system can begin to make some deductions. It still operates pretty on the mode of binary of 0 and 1. And so it's either on or off, it's either this or that. So again, we also need to have that carefulness in our returns so that we have that consistency and the system itself does not throw it back at us. And as to the computation of penalties, we definitely will go back end again to our team to look at that and also to see how such issues could also be resolved, and also probably provide online contacts to which our taxpayers could also dial in at the point of filing return if such issue occurs, so that it can be corrected almost immediately. Thank you.
Okay, thank you very much, Mr. Gonjubola. Let me quickly move over to Mr. Adebanji. Knowing that the FRS had tried, and you'd have heard from the conversation with Mr. Gonjubola there that these are still early days for the technologies that are being considered. And we know that in 2016, 2017, the FRS tried to actually automate the VAT collection process, looking at industries by industry. So there was a separate technology that was supposed to target the FSI space, target ENR and all of that, or oil and gas. And so thinking back to 2016, 2017, and looking at what the FRS is trying to do now, I think the question is, from your perspective, from the financial services space, what are the initial reactions or the initial thoughts around what the FRS is trying to do, and how do you think this can be better delivered?
Thank you very much. Good afternoon, distinguished panelists and our FRS chairman. To speak to that, it's a great initiative to automate.
Sorry, Banji, can you increase the volume so that we can hear you better?
Am I audible now?
Yes, you are. Yes, you are. Thank you.
It's a very great initiative to do automation, but automation comes with a lot of challenges. For 2016-2017, why it had failed to have that impact or to commence, because automation must be regulatory led, not allowing industry players to dictate to what regulators want. The one thing that you must take appropriate consideration of is that no matter the level of software that you develop to sit or rest or pull data from banking system, you will not achieve any result. I must tell you for a fact. Practical consideration. Why am I saying this? Core banking application is never intended to produce tax returns. Neither is it intended to produce financial statements. What you want is what do you want out of it. So what is done, and I can give you practical consideration, is what CBN has been able to do in getting data from banks and those data which they use in reaching far-reaching decisions. This is what I think FRS should look at. What has CBN done? It takes CBN up to 7 years to get to where they are today. I'll take you back to memory lane. I love automation. It makes transparency. It makes easy laborious exercise that we have to engage tax people coming to us. No, you need to sit in your office, get all our data. But you cannot get data, say you want to pull data directly from core banking application. It will not work. It will just be a garbage in, garbage out. But what needs to be done is CBN, what CBN did, and I believe FRS can take a cue from this. Get your specialist team that have the understanding that the fact that core banking application can only provide data that's been input into it. That is not what you want. For instance, 98% of transactions takes place in payment space in terms of count, 85% in terms of value. And most of these transactions takes place by way of partnership and collaborations. What you find on banking system, you cannot easily deduce what is the fees, what's the earnings upon which that should be based. If you say leverage is software on my system, you pull out all the data, but how do you segregate what is fee, what is commissions, what is discounts, what do we earn? So it's extremely difficult. What are we suggest in terms of automation? I've listened to Mr. Agbojibola in terms of ProMax. You can maybe do that for manufacturing space, but for banking, it's extremely difficult. You create an environment, create your structure of your data. What did you want? You want X, Y, Z. Sit down with stakeholders, call on every one of us, CFOs, CIOs, let's sit down at round table. This is the structure. You have your system. For instance, by the time we're looking at collection of tax, nobody knew that 98% of tax by count will take place in digital space, mobile banking, internet banking, USSD, and so on. And a lot of parties are involved in this thing. For instance, in a payment space alone, in POS or web, you have 6 parties sharing this income. Just 0.5% is shared by 6 parties. What end up in GT Bank, for instance, like GT Bank, is just our own share of that 5%. What should be taxed? Who should be taxed? When we're talking about VAT, let me give you a VAT, for instance. VAT is a consumption tax. If you come to us you spend 1,000 naira, maybe on a POS channel. This 1,000 naira, merchants see that 0.5%. This 0.5% is shared pari passu among 6 parties. If you are the merchant owner, you get your own portion. If you are the card issuer, you get yours. If you are the payment service provider, you get yours. If you are the collecting, like is the one that provides the gateway, just like InterSwitch, you get yours. NIPS, which has the residual or collection of responsibility of the data, also gets theirs. Who pays the tax? Is it the customer or is it the merchant? So these are all the various issues which we need to address before we say, let's come and get a system that picks information directly from core backend application. You will not achieve results. What CBN did was to get specialists, vendors, approved vendors to say, write a link. On their own part, they created a server within CBN, created another server, which is called dedicated server within the banking system. That means each bank has 2 dedicated servers for CBN. 1 resident in CBN. 2, a dedicated server that you just, once you do your end of day, just transform information to that particular server. The server has been structured in such a way to look at what CBN wants. Let me tell you, for income statement, CBN is saying, look, because I heard when Mr. Obayomi was saying a manufacturing company paid for something billion and all the banks pay for something billion. He's looking at 2 different things. They are different and separate. The only reasons why you see a for something billion in terms of CIT paid by collection of banks and just one manufacturing entity pay for something billion, because the structure and the dynamics of transaction engaged by banks are clearly different from that of manufacturing. But if you actually want to bring everybody within TaxNet, because we want it that way, what you have to do is to create your own environment, structure it in such a way, we call it 2 sets. In monthly returns on CBN, there are 41 2 sets that has to do what's called cost validations. And that will be duly extracted. We will extract it from our own common banking application, take it to that environment. We have agreed with CBN to design in a form that suits them. Then they create a mapping. It's like a KPMG, E&Y, and all these top audit firms, Deloitte. You have your illustrative notes that you have come up with. So FRS need to come up with like illustrative notes, which will show mappings. That mappings now makes everything uniform. This is what I want to see. Where is it? That means your understanding of the ledger, because ledger is different from one bank to the other. So you have to look at how do you bring everything and harmonize it in such a way by writing a code or a program that says, if I see income sharing, for instance, from payments in GT Bank, either GT Bank puts it as part of my fee and commission, or is putting as part of other income, put it as part of whatever, take it to this way. That means there is a command that will be written in terms of language that once you see this, take it here. So that's first thing FRS need to do. Come up with a standardized mapping process so that transactions will be appropriately reported. If that is done, I can assure you they will achieve their desired objective. But in terms of saying get a particular software, sit on core banking application, it's just a matter of extraction. You extract, what are you going to make out of it? In terms of protection of this data, what's it? And I'm happy when Mr. Agbojibola said a binary code. This thing is reported to CBN in my binary base. It's not what you can see. That means it's an XML format, which is why the vendor will write a code that is approved vendors of CBN. They have designed the structure in terms of mapping what they want to see. Then the vendor writes a code that will transform whatever we have done into an XML file. Then it now moves to that particular server dedicated in with us here. That server, we call it final submission tool. That final submission tool, what it does is to do cross validations. Because what they've done is to provide, if there's an error, if there is a gap, if there's a comma, if there's a figure you have stated in one particular sheet, and it's not tying to another one. It's like when you auditors prepare a fund flow statement, you prepare notes not tying to the face, so you can easily pick everything. So if they follow this, I believe they will achieve the automation, and that will help us a lot to get the necessary traction which they need. Two, what is important is when you look at disclosure for some banks, for instance, you see what called electronic receivables. You see humongous sum in the region of 120 billion. To tax man, that's not revenue. What is revenue might just be 1% of that. So what is necessary is for FRS to come and say, banks, can you break down all these things? Create a chart of account for us. And all of us, we go ahead, do exactly what FRS wants. So we start mapping by way of chart accounts, now write a codifications around it. After that codifications, create environment so that we don't duplicate investment in infrastructure. We have the servers already. And if FRS can also have a appropriate handshake with CBN, they are both federal government agencies, to share data. What CBN has done currently, just leverage on it by saying, look, CBN, you are focusing on X, Y, Z. We are focusing now on tax. So let's find a way of leveraging on it and making it to report also tax. But if FRS wants to go alone, what I'm advising from practitioner is get subject matter experts. It must be led by specialists within FRS. Understanding the act and the transactions are two different things. What you start saying is the way and manner banks report earnings are quite different. Core banking application is not designed to produce tax data. What produces tax data, which is why I'm happy when you are referring to all the surveys which you have done, that everybody said is still manually driven. Yes, manually driven because we've not started this deep dive automation. We cannot say we are doing manual returns to CBN. It's automated. So if we take all this into consideration, what you start saying is you'll be able to pull as many, what you are not saying, you'll be able to have group grasp and understanding of all the various earnings upon which tax should be charged. This is what I think my own initiative.
Okay.
But must be regulatory-led, partnership and collaborations. Let me just quickly add this. And you have to extend it beyond banks. Like I said to you, any earnings which you see on the, especially for VAT, CIT is a simple thing. For VAT and withholding tax, any earnings which you see now does not audit. Bank only provides a platform, and 98% taking place through that platform. Only 2% takes place in branch. So if you say you want to see these slips, you want to see Terra, gone are the days. So you have to get adequate understanding that look, we need to bring all these parties, the markets, where all these things are taking place, also want to get appropriate information from them and tie it to whatever the banks are also giving you. Lastly, the beauty about it is that the settlement master files, they are with NIPS. NIPS has everything. What NIPS will give to you is on net basis. So I say this is what transaction that leads to this. That means NIPS also have to help by providing deep understanding, deep analysis of all those transactions. By God's grace, with automation, we'll be able to improve the earnings of federal government.
Thank you very much, Mr. Banji, for your insightful contributions. There are two key points that I picked. The first one is, the FRS can actually benefit from leveraging on the structure the CBN already has in place. What they need to do is probably to collaborate and ensure that the structure that they have for extracting data can be expanded to allow them to extract the same data that will be used for tax for the tax determination. But if they decide to go it by themselves, they have to ensure that the consultation is wide enough to include not just the tax department and the tax leaders. You also need to have the technology leaders as part of that conversation so that it is a productive engagement. So thank you very much for those insights. I'll quickly go to Eleanor and bring it a bit home, to ask about some of the numbers that have been thrown around. Remember, we talked about the survey that was conducted and some of the feedback that we have. So some of the findings we have is that 50% of the respondents for that survey had indicated that investment in technology for tax is lower than investment in technology for other functions within the business. Also, almost 50% of the respondents believe that the advancement of technology by the FRS is a key driver for making a business case for investment in tax technology. So from, just to hear from you, from a practical point of view, how do you think this would drive the business case for making investment in tax technology by companies?
Okay, thank you very much, Femi, for your question. Well, first of all, let me just say special greetings to the executive chairman and to the partners of KPMG for your insightful presentations. I think each of them really had an aspect, that's sort of driving the conversations that we're having today. You all, quite insightful actually for me. And I think most importantly is sort of where everyone is going. I mean, you consider, sort of the impact of COVID, and you realize that, look, we all have to sort of get on the change train and adapt accordingly. I mean, we don't know what the new sort of way of working will be, but if anything that has occurred in the last year is anything to go by, then you can see that we all need to sort of focus, actively and deliberately in the digitalization age, so to speak. So, with specific reference to your question, actually, I was surprised at that statistics. I thought it would be different, to be honest. And maybe if I step back a little, I think it's really about strategy. I mean, the tax strategy is really it needs to sort of be aligned with your company strategy. And if your tax strategy is sort of aligned with your global tax strategy, then you see that your tax strategy itself is really crucial for your future growth. And so, when I saw that, I think what came to mind was, you have to then think about, okay, what is really the CFO thinking about? How does he see the tax function? If the tax function is deemed as a compliance function, then that probably explains why you had the statistics that you had. But if the tax function is sort of, aligned with your strategy, you wouldn't be hesitant to sort of actively invest in the technology for the tax function, because of course the investment you're making today potentially provides you with opportunities, for the future. So I think, to be honest, it's really a mindset change. It also depends on, the stages of the different organizations. But when you think about, your tax risks, you're thinking about, administering, these tax risks, looking at the tolerance you have as a company and how you're managing and planning your tax overall. I mean, technology is your bedrock. It's sort of center stage for you, to sort of drive your business, going forward. So a CFO who has sort of an oversight of the tax strategy will determine that decisions he makes today with an investment in technology will be the shift for his business longer term. So I think, maybe it will be around, I think Wole talked a little bit about this in his presentation, and I think Jay also mentioned that it's really stepping back to say, maybe my direction is I need to look at my tax strategy. I mean, 2 years ago, we had a requirement to publish our tax strategy on, on our websites and to sort of embed that policy in our business. And, for our business, we found that, tax began to take a center stage, at our board meetings, it takes a center stage because we understand what the implication is. I mean, we talked about the fact that it can be quite costly with penalties and with non-compliance, but even beyond looking beyond compliance, it's really more, I mean, tax is for some, especially for our industry, it is very crucial in understanding what those tax risks are. I mean, we talked about reputation, we talked about compliance, managing penalties, but also, it could potentially be whether your business will survive in the next 5 years or not. So I think, it's really a crucial part to think about tax from a governance point of view, from a corporate strategy point of view, and then the way to sort of insist or to defend sort of an investment in technology for your tax function is really, it's underpinned by, how far are you looking ahead? So I think I'll pause with that.
Thank you very much, Eleanor. Two things that you actually mentioned that, struck a chord. The first is the mindset change that CFOs need to have, because you have to move from looking at tax as just a compliance service to actually a value-adding part of your business. And I think that change will drive a lot of the way you think, the way investment and the way tax is then treated as the business. Second thing is, increasingly tax may become a key driver of whether the business survives or not. Because when you look at where penalties have been levied and they are so huge that it could drive the businesses to go under. So it's important that tax is then managed proactively by the board now. And I think those are very key points to take away from that conversation. And then just to link that to the conversations, I'll also ask Matthew, we've talked about the digital economy, and that is an economy that everyone talks about now. It is the new emerging gold. Everyone is talking about digital economy, how to tax the digital economy. There's hardly any tax conversation that goes on now without them talking about taxing that digital economy. So I think for me, the question to Matthew is, in terms of digital businesses, right? And like I said, everyone is talking about them. From your practical experience, why is it a difficult challenge, or why is there the difficulty of taxing this sector appropriately? And from your practical experience also, what do you think the FRS should be looking at? I know we've introduced the SCP order and the VAT rules, but from a practical experience, just share with us, how digital economies should be looked at differently.
So hello everyone, and thank you for having me. So I'm really delighted to have this opportunity to also attend the forum and to share the views with the FIRS, with the chairman of the FIRS. And it's hopefully the start of discussions between private taxpayers and the authorities. So I think that a lot of has been said already about the tax function, and so I don't want to rephrase what Jay may have said already. So here, what I would like to focus on is to say that effectively the automation initiatives in general are improvements, and that we have to welcome and embrace them as a fact, as a reality, and look at the benefits we can get from this trend as actors of the civil society and as part of our fiscal responsibility as taxpayers. Okay, so the efforts have been and investments, an incredible amount of work has been made by the tax administration for the digitalization of the tax systems. And this needs to be recognized here, and we discussed it at length. On the taxpayer side, I think, I mean, what we need also to realize is that a lot of technical challenges are encountered, okay, which require for the tax function to liaise with ERP development, so and you know, other members, other functions of the finance group, and notably FinOps groups, and also it represents in that respect significant investments on the taxpayer side. Okay, and so we are we have to put that back into the current context and the current economic context. Since last year, we are in a significant global economic shock. Okay, and this is true for the governments, and it translates into budget deficits, but also for the private sector and the household. So here we need to understand, we can understand that the collection system efficiency is a priority for the government. But what's, I mean, as a stakeholders from the private sector, and what I see with all the suppliers and all the partners that we are doing business with, this strategy needs to be, and the digitalization needs to be phased in. I mean, digitalization for sure can be a very powerful tool in a constrained environment for the tax administration, where the number of agents available can be constrained, where the time required for field audits is also, I mean, not adequate for the tax collection, for fulfilling the purpose of tax collection. But this requires and suppose that there is a large adoption and usage of the digital systems. And that is where we need to be very cautious, because there is a thin line where the stakeholders in the economy can go back to offline. Okay, and so this is where, you know, the collaboration between private companies, private actors, and the tax administration is extremely important. So we phase the approach for the promotion, and this is really the bedrock of, you know, the success of the digitalization, in my view, is really, I mean, going through the promotion of a compliance culture at taxpayers level, and also, you know, education and simplification of and clarification of all the obligations that are, you know, with the taxpayers. Then, I mean, there is another aspect which is very important, and here we are probably going into, you know, the digital business activities more specifically. Okay, the digital business effectively is viewed as, by many countries, it's not only in Nigeria or in Africa, it's pretty much everywhere, it's pretty much globally, as the next gold mine. Okay, and actually, the reality of the business is diverse. Okay, and we need to really consider each stakeholder and the specifics, which can differ from one company to another. Okay, so we've got, I mean, be it on, you know, the product offer, or I mean, it can be physical goods, it can be digital goods or services. You can deal with companies which are purely offshore, non-resident companies, and you can have local actors. So, I mean, another element which is also important to consider is the stage at which, you know, each company can be in the cycle, okay, in the growth cycle, in the investment cycle of its industry, in its own industry. And so that's where, I mean, the principles and the processes which are put in place around the tax digitalization can be sometimes, if not consulted and measured, phased in, can be quite disruptive with some industry sectors. So globally, I mean, if we look at e-commerce, which is now, just to take an example, a concrete example, digital commerce in Africa, depending on the country, accounts for 1 to 3% of the total retail in Africa. Okay, so this is, I mean, this puts in perspective, the gold mine that we, I mean, everyone has in mind with the famous example that we can all think about. So that is where we need to really be very cautious on, I mean, the mechanism we put in place to make sure that actually we are not favoring one actor to the detriment to the other, or we are not by going and being too intrusive and punitive to a certain extent on the digitalized business to incentivize some people to go back offline, okay, which would, I mean, require the tax administration to mobilize quite important resource in order to track down and collect their due. So really moving on to the impact on the tax function now. So I mean, I've been doing this work, so I've got a mixed experience, from a Big Four, around 14 years in the Big Four, and now for almost 10 years I've been in an in-house role. Okay, and so I mean, the tax function has changed quite drastically, and I mean, I quite see positively the automation of the quite burdensome production tasks, around, tax compliance, and move to more added value review, control, and, analysis of, what the systems are producing and making sense of, the new obligations. And so in terms of the configuration of the tax functions, indeed, I think it is really important to realize that it is a stakeholder from the finance function, but reporting directly to the C-suite and also to the risk and audit committees. Okay, so because it's not only risk management, but it's, I mean, an integral part of the business and the finance function to make sure that, I mean, the business as a whole is paying its due, it's taking its share of the fiscal responsibility for the civil society, and also making sure to have the right people in order to deliver on this roadmap. So not only with tax specialists, but what we see is that we've got more and more, and even within the tax function, we've got more and more people specialized either in transfer pricing, in indirect tax, etc. And this is required by the sophistication and the digitalization move, and also an upgrading of the knowledge and the cross knowledge, I would say, of the tax function with other departments like technology and system developers.
thank you very much, Matthew. The key point you've made is that in taxing this digital economy, the tax authorities have to be careful to ensure that they balance the tax rules so as not to discourage a lot of them going offline, and that makes it a bit more difficult to actually harness the tax from that sector. So we would quickly take, because now we are taking questions from the audience as well. So we have just limited time to complete this. What I would do now is go around everyone, ask one question, just 1 minute to answer, and then we will take most of the questions that have come in that are mainly directed to the FRS. So I would just ask one question round, 1 minute everyone to answer, and then we go into the other questions that are meant for the FRS mainly. So the question for Mr. Bojubola really is that we know that this technology drive, as with many other initiatives, if the risk, if it's not properly managed, would target the companies that are already compliant, right? So how is FRS going to ensure that the application of automation and all of that is targeting the MSMEs that account for maybe like that account for well over 60% of the businesses you have in Nigeria? How is FRS looking at this?
Yeah, thank you very much, Femi, for that question. You understand, and all of us know, that tax rules are meant for all. And in the same way, tax administration must also be fair to all. So as we drive towards ensuring that everyone comes within the net, we are going to be using the system for everyone, for transparency, for fairness, and also to ensure that there is no favoritism in the management of tax affairs of every individual or company or entity in the country. And so as we use this to make things easy for everyone to comply, we're going to apply to those who are already in the net and those who are yet to be in the net and bring them in. Thank you.
Thank you very much for the succinct response. Over to Eleanor now. Looking at how COVID has actually impacted the way we live and do work and do all of that. From your practical experience, can you just share with us how your company has responded to the impact of COVID, both the finance and the tax function? How have they responded to the impact of COVID?
Yeah, all right, thanks very much. Again, COVID has actually sped up technology. It's actually sped up the technology world. And unfortunately, companies who were sort of behind the curve in deploying technology and automation in their business would have actually suffered very greatly. So I think for us, and you probably see that in our industry, we sort of were ahead of the curve. We were able to work very effectively, remotely. In fact, remote working has continued. We just have, very staggered operations in our business. And, don't forget, when you look at our industry, there's field operations going on. People have to travel to the field. They have to be on rigs. So we basically adopted processes to manage that. And I think the whole, automation and technology was really the bedrock of supporting what we were able to achieve in our business. But I'd just like to add really that FIRS is on the right track. I mean, I was quite pleased with what the executive chairman shared. I just think that we need to continue to look at automation more aggressively. If there's a way we could sort of do this in a sustained way, so that even after one tenure completes and another one begins, we sort of carry on whatever processes or technology advancements are being deployed by one regime into the other. And for us in our industry, FIRS engages OPTS very actively, and I think it's effective, it's working. We just need to have the opportunity with them to sort of, allow us to be part of sort of the design phase of the work that they do, so that when they're executing a lot of the automation, it makes it a lot easier. So again, we've done a lot in technology in our industry and in my company as well, but there's always a lot to learn, a lot to do. Yeah, artificial intelligence, there's data analytics, there's a lot going on around the world. So I think FRS needs to make that investment. I know that the executive chairman talked about some of the difficulties, especially with regard to the drop in revenue, but it's actually an investment worth making now, to sort of support where, FRS needs to go in the future. So, strong value proposition and something I think is worth really aggressively pursuing. So thank you very much, Femi.
Sure. Thank you, Eleanor. And to Banji, very quickly as well, in terms of your industry is one of the very regulated industries. You have the CBN, you have RAMFAC, you have the Senate, the House of Reps. Almost everybody is looking at the financial services sector. With the automation by the FRS, do you think, from your perspective, that it would reduce the amount of industry audits that you get, or the amount of industry visits that you get?
Thank you very much. Once again, I believe if properly articulated, and if there is consensus or agreement, because all agencies of federal government, then that should reduce the level of visit. But being from my own little knowledge of the country, I believe it will take a long time to achieve this consensus, because each regulators want to assert their own authorities, which is why I say we don't need to reinvent the wheel. CBN has done it. It took them 7 years to come to this level of getting appropriate information for their use from banking. So FRS can leverage on it, and what is just needed is for every other ministerial agencies to agree that FRS is the custodian or repository of this data. Can we just leverage on what FRS has in terms of share collections, share information? If that is done, it will help everyone. And difficulties, transparency, convolution, and we have seen.
Banji, we can't hear you very well.
I think it's my data. Can you hear me now?
Yes.
Once that is done, when it's agreed clearly among all agencies that FRS is the custodian of tax in Nigeria, and they all leverage CBN or copy what CBN has done, then it will reduce the level of visit from all these regulatory agencies, either Senate and maybe states, also encouraging to FRS space. But it will be a bit difficult. What needs to be done is for all these people, all the leaders to agree that for tax functioning is doing. I'm not praising it because he's executive chairman. When he came in, and that has put an end to area, we have started in our revenue services come to all banks and say they need this particular information. We always say this is under the purview of FRS. He has come up with so many tax publications which we've used to preserve our own position. So it's a good one if it is agreed that we should give appropriate responsibility in terms of tax once it has to do with federal government to FRS, so I don't have duplicity or duplications which we have currently. Thank you.
Thank you very much, Banji. And to Matthew, just quickly as well. I'm sure that you're familiar with the SEP rules that was introduced in the Finance Act. From your experience in other jurisdictions, do you think the SEP rules that we've introduced are in the right direction? And what kind of changes would you like the FRS to actually introduce as we look at the subsequent Finance Act to make the SEP rules a bit more flexible, considering that you've mentioned the risk of it, driving businesses offline as well?
Well, I mean, the SEP rules, and I mean, I've got, raising some challenge, okay, some practical challenge around, I mean, the audit trail. I mean, how do we audit the numbers of the non-resident companies? how do we enforce, okay, and what are the regimes, okay? And I think, I mean, other countries, and this is one initiative which is a bit unique in Africa, as far as I know. In other countries across Africa or in Europe, other mechanism like the digital service tax, which is much simpler, have been, and much more straightforward, have been favored. Okay, so this is a choice, and there is no right or wrong. I would say, yes, the SEP has its lot of challenges, and notably with the the segregation of that is triggered, and the audited by an external auditor of the Nigerian activity is I mean is creating an element of complexity for non-resident companies, which can be addressed. Now, the digital service tax, I mean, as well, system has its own challenges, and it's not something which is perfect, and so I'm really waiting for what is coming as a consensus from Action One and Pascal Saint-Amand to see and what is going to be the rule of the game, okay, for non-resident, and I mean, having a level playing field between non-resident and resident companies, okay, like you can have, for instance, in our industry in Nigeria. So so yes, I mean, and I think that it is by engaging again with the tax administration. So we do it in a number of countries, and in Nigeria, I don't see why we shouldn't do it as well. Is really having a back and forth discussion and fruitful discussion between the tax authorities, because we are entering into a new era. It's not just auditing, controlling, and collecting tax. It's really having a shared responsibility and views, and explaining also how the industry is organized and what is the reality of the market, and what I mean, the tax, how tax could be disruptive in the way either the industry is organized, or the local market can be organized as well, okay, favoring one actor to the detriment of the other. So that is, I really hope, something we can have going forward with the tax administrations in the various jurisdictions.
Thank you very much, Matthew. I mean, we cannot, and all the speakers today have emphasized the need for engagement, and I think that is the message. The FRS would need to engage more with the industry players. Otherwise, whatever comes up, there will be challenges. We'll have to go back and forth. Like Mr. Banji said, it took the CBN 7 years to design the system that they have now in place that is working. So it's still early days for the FRS, and we believe with more engagement, we would be able to actually address most of the issues that the industry, or the concerns that the industry has about the technology and automation drive of the FRS. So just to go, we've gone into the questions, the question room. I would like to make an appeal, special appeal to Mr. Bonjubola, because like I mentioned, most of all the questions that we've seen are directed to the FRS, but I see them as a bit more technical questions. Well, not technical, but more process driven. So people are asking about challenges with Pro Max, with payments, and some of the other things. And you've mentioned here that you have a team in-house that is focused on that. So the appeal I would probably like to make to you, sir, is can we collate the questions and share? And with the understanding that we may get a response from the FRS and then circulate to all the participants. I don't know whether that's an acceptable proposal, sir.
Yeah, thanks. Yes, it is a very fair one. We will look at those questions and send them back to you, and then you can then disseminate to the participants. Thanks.
Thank you very much. So that will give you the opportunity to also liaise with the team internally to look at those things, and then we'll be able to share the responses received. So thank you to all the participants that have asked the questions relating to ProMax and other technology and all the other initiatives around the technology. We would send those questions to the FRS so that we'll be getting responses from the units and the teams that are directly involved in these technologies, and then they can address those issues specifically. So we will send, once we receive the response, we will circulate to all participants. And if you are directly affected, I would also probably ask the FRS to share with us their the contact details, so that if you need to reach out to somebody in the FRS, you can also call them directly. I see somebody ask whether there will be a live webinar on Tax Pro Max. It's something we can also discuss with the FRS, and we'll look at if there's an opportunity to have a live session where participants can also have a live feel of how the tool works. So I will, at this point, want to thank everyone. Yes, we will also share the slides. Once we receive the feedback from the FRS, we share the slides and the responses from the FRS with all participants, and then get the feedback so that everyone, and also get the contacts, so that if you need to reach out to the FRS directly, you can do that. So at this point, I would like to thank the panelists. I would like to thank Mr. Gonjupola, who is always been a very big leader, if I were to use the term, and always someone we've always looked up to. So it's always a honor to have you on board, sir, and always have these engaging conversations. I also like to thank Mr. Banji, thank Eleanor, and thank Matthew as well. It's been a pleasure having all of you on this session, and we hope to have continuous engagements. Next time we have a similar session, also invite you to come and share your perspective as well. So thank you all, and Ike.
Thank you very much.
Thank you very much.
Thank you.
Thank you.
Ike.
Okay. That was very engaging, Femi and the panelists. Thank you very much to the presenters and the panelists. Like Femi said, we'll get back to you with the questions after the FIRS response. So without taking much more time, we'll go straight into the launching of the tax function self-assessment survey report. A brief of the reports will be shared by our very own Wole Ajayi. Wole Ajayi is a partner and head of tax ENR and our managed services units. Wole, good afternoon, and over to you.
Yes, thank you so much. Good afternoon, everyone. It is my pleasure to launch the tax function assessment survey. But just before we do the launching, I would like to make some brief remarks. I think if there is one common theme that has run through all the presentations that have been made today, is that the tax environment is changing. And so the question is, how do we respond to those changes that we're seeing? There are so many issues today that are affecting and disrupting the tax function. Some of those issues we've spoken about in this webinar. We've talked about the issue of governance, data sharing, legislative changes, technology, which is the big one, outsourcing, outshoring, offshoring, and transparency issue. And what these issues have done is that they brought about new complexities, they brought about pressures, they brought about challenges, and may I even had opportunities. So for example, who would have thought that tax would be a front page news item? When you open the papers today, you're likely to see stories of real and perceived non-compliance, with the tax laws, of course, with special reference to the digital companies. And so if the tax environment is changing, what about the focus of the tax function? It has to change, it has to evolve. The focus is not changing from just optimizing, you can go to the next slide, from just optimizing, effective tax rate. Rather it's not focusing on how do we manage, the tax function and also manage the corporate reputation, with special focus on tax. So that is the state of tax today. And of course, one thing is clear, is that technology is going to play a key role in how the tax function of the future will look like. So it's not surprising that we're seeing increasing role of technology and digital tools. Not only does technology enable real-time access and analytics, it also provides some other opportunities, some other benefits. First, you're able to, with technology, to get visibility into transaction data. We've seen what the FRS is doing with the backtrack. Not only that, it also helps you to unlock value. It helps you to manage your risk. It helps you to improve efficiency. And what is most important is that it provides critical business insight. And so if technology is becoming a real issue within the tax function, the question then is, how are the tax authorities responding to the issue of digitalization? We've seen so many companies or many tax authorities complaining about the fact that they're losing billions of dollars, right, in revenue, in tax revenue, through, tax avoidance scheme, through non-compliance, through fraud, or through non-payment of taxes. And so they are under increasing pressure, right, to increase transparency and close the tax gap. So no wonder, as we've heard the FRS say today, they're investing in technology, they're investing in digitalization, they're investing in data integration analytic tools. So if the tax authorities are doing that, the question is, can business afford to be left behind? So businesses need to ask themselves the question, how would they leverage technology to be able to build an effective and efficient tax function? That is the issue that businesses need to ask. In fact, the two questions are, what is the state of your tax function today? Have you conducted an assessment of your tax function today? Where is it on the maturity space? And how prepared are you for the future? So to help you answer those two questions, what we did was to conduct a survey of the assessment of tax functions among companies in Nigeria. And what we're going to be doing today is to launch the report of that survey. But I'll just give you some highlights of the findings from the survey. I know that some of the speakers have made some references to some of those highlights. So without much further ado, let me just give you an idea of the scope of the survey. In terms of the survey, the scope we cover, obviously we had to look at the governance and risk management of the tax function. We have to look at the tax professionals, that man the tax function. What are the capabilities? We also have to look at the process and responsibility, data information, and technology. And in terms of the number of people that responded, there are 76 companies, comprising 69% of them are multinationals, or 52 of them, 31% or 24 are national corporates, Nigerian corporates. So that's the makeup of the people that responded to the survey. In terms of the people that completed the questionnaire, they're completed by CFOs and tax leaders. So I'm just going to go straight to the key highlights in terms of the areas that the survey covered. Let me start with governance and risk management. 57% of our respondents, claim that they have tax risk policy or tax risk management framework. What that tells me is that it's the board or some form of body committee or other committee that sets the tax strategy agenda. And then 43%, say they don't have a tax risk policy or any management framework for managing their tax. And that raises some fundamental questions, like how do they ensure the integrity in compliance and financial reporting? How do they ensure that they're able to control and manage the tax risk? So those are the questions that the 43% that don't have tax risk policy will need to answer. Then when we look at the people that have oversight on the tax function, 56% of our respondents believe that their boards discuss tax issues periodically. And what do we mean periodically? Some of them claim that every board meeting, tax is a boardroom agenda. Some claim that the board discusses tax issues, maybe every quarter, or I mean, every defined period of time. So there is a process that is in place. While some people claim, that the board will discuss, every AGM, just before the AGM starts. So what is surprising is that 44% of the respondents say that the board only consider tax issues anytime there's a tax event. Now that is being reactive, right? I mean, which is the whole essence of this. We need to have the board set the scope and set the strategy for the tax function. So the 44% that are left still need some work to do in that regard. Now, in terms of access to real-time information, we know that access to real-time information is extremely critical. If we don't have access to real-time information, then the quality of decision-making will be badly affected. 73% of our respondents believe that they have access, to real-time information, while 27% believe they don't have access to real-time information. Next slide. Next, let's speak to people and capabilities. Interestingly, when we look at the people that staff or that man the tax function, 74% of our respondents have less than 4 full-time employees in the tax function. So it said in some cases you have 1 or 2, right? It also may be a reflection of the size of the business or the importance that is attached, to tax. But when you look at the career development for the tax professionals, what most people claim is that they don't have formal career development path for tax professionals. And so the question that normally arises is, what is next after being a tax manager? And this is something that needs to be looked into, by all companies to ensure they have a formal career development path to motivate the tax professionals. So in terms of the skill sets of the professionals in the participating companies, interestingly, the large chunk of the people in the tax function are mainly accounting professionals. 76% of the people in the tax function are people with accounting background. 10% are made up of lawyers, and just 9% are made up of IT and data specialists, and others 5% of various disciplines. But of course, if you want to have a tax function that is ready for the future, we're probably going to be seeing increasing use of technology. So we're going to be seeing an increasing number of people that have IT and data technology skills. So in terms of the way tax departments are benchmarked, how do you measure, how do you track, and how do you reward, tax professionals? One thing that we find out is that 91% of our respondents believe that the key KPI they use to measure the performance of the tax function is the ability, to meet deadlines. And 87% believe that the focus or the main KPI is mainly about how accurate the returns are and the magnitude and the frequency of penalties and interest that are assessed as a result of tax audit and investigation. While 78% of our respondents believe that the focus or the key KPI they use is how the tax function is able to manage the tax risk. 67% believe that the key metric is how well they're able to save. They are able to save on tax costs. And of course, 62% believe that tax audit outcome, is what determines the basis for measuring the performance of the tax function. One thing is key is that whatever metrics that you use to evaluate your tax function, they must comprise both financial, they must also include operational, it must also include people. So you have to have a combination of metrics, that relate to that. One key metric now, especially when the issue of transparency has become a key issue, is you may even want to have a metric that focuses on the number of mentions, of the company's names in the media, especially with respect to how the company deals, with the tax position. Or it might be in terms of the total tax contribution, by the company, to government. And of course, you can also look at the number of audit adjustments that are made. So you need to have a combination of metrics that will enable you to properly evaluate the performance of the tax function. Next slide. So in terms of process and responsibility, We've talked about, one thing is clear is that the processes are not documented as standardized. There are no standard operating procedures. We've also heard, and of course, and the survey shows that the responsibilities are not clearly defined. People don't, well, businesses don't know when they're meant to refer issues to tax, and tax issues, tax departments is not even proactive in addressing issues that refer to them. And in terms of the sourcing strategy, it's a combination of in-source, co-source, and outsource. And what determines the strategy that companies will adopt is a function of how accessible they have to global resources, and of course in terms of the skills that the people in the tax department possess, and of course in terms of how available those resources are. Let's just move on to the next one, which is data and information, which is one of the key things to look at. Interestingly, 20% of data that is used for tax analysis is centrally available. That means 80% is not easily available. So you can imagine the efforts that the tax department has to make to be able to get access to data. And some of our respondents, 20% of our respondents believe that the data they get is only used to prepare tax returns, while 72% believe they not only use the data to prepare tax returns, they also generate critical business insight from the data. In terms of the work that the data use, one thing is clear is that a lot of 40% of our respondents believe that they cannot use the data as presented. They need to do significant work. While 63% state that they require moderate work. Only 23% of the respondents believe that they don't need to make any work to the data before they can use it. Technology, which is the last one that I'm going to talk about, just like this. Yes, we've heard today that the process is really manually driven, so there's no level of automation. There's significant reliance on spreadsheet, and what we've also seen from the result of the survey is that technology is mainly adopted for filing returns and payment of tax. In terms of the adoption of technology within the tax function, about 53% believe that it's just below the way it is used in the rest of the business. Now, these are the key highlights from the reports that we're going to be launching shortly. So this is the moment we'll be waiting for. So, distinguished guests, ladies and gentlemen, it is my pleasure to formally launch the tax function assessment and survey report. Okay, so having seen the report, what we're going to do next is that a copy of the report you can easily download while you're still on this session. So the next slide, you can see the quick response poll on the screen. All you need to do is to bring out your phone, go to the camera, and scan the quick response poll that you can see on the screen, and then you can download the report. This is the way we leverage technology in KPMG. And you can also click on the link and it will take you to the report. So you can bring out your phone, scan the quick response code to download the report. So thank you so much, for participating in this webinar. And I trust and I hope that you find the insight on the reports extremely valuable. At this point in time, I would like to hand over to Ike. Ike, back to you.
Yeah, thank you very much, Wole. I actually miss those times that at the point you launched this, you should have been clapping, but I'm sure people are clapping at their various places. So thank you very much, Wole. Make sure you download this. In case for any reason you don't download it right now, it will be available in all our social media channels. So please try to get a copy of this report. I'm sure the details would wow you, and you will definitely see how you can make some improvements in your various tax functions. So I think we've come a long way. It's been a fully packed webinar. So at this point, I would just hand over to Aminat Jegede, a senior manager in our tax ENR unit, to bring a close to this session. Aminat.
Thank you, Ike. Yeah. And just like you said, it's been a very impactful session.
And on behalf of KPMG partners and staff, I would like to say our profound gratitude to all our for making this webinar a success. For the esteemed chairman, executive chairman of the FIRS, thank you so much for always heeding our call anytime we call upon you for webinars of this nature. To our keynote speakers, especially my colleagues in KPMG, thank you for sharing insights on how companies can get their tax function future ready. To our esteemed panelists, we are extremely grateful for the practical perspective that you brought to the topic. And of course, we need to also appreciate all our valuable participants for your attention and also for the engaging questions that you asked our panelists and also for joining and spending this time with us. Last but not the least, I would like to appreciate all my colleagues that worked tirelessly to put this webinar together. You are the real MVP. At this point, at the dot of 1:30, we would like to bring this webinar to a close. We thank everyone for spending this time with us, and we wish you a pleasant day and enjoy the rest of the week. Thank you so much, and bye.
Thank you. Bye-bye.
Bye.
Thank you very much.
This isn't the world you grew up in. You've become an expert in areas of the business that go well beyond tax. Your organization is more global, increasingly digital. Your business models are more complex. Compliance is getting complicated, and penalties are more severe. Governments around the world have moved towards taxes that are easier to collect and administer through technology. Suddenly, your board wants to hear from you about risks and opportunities, and you're not the tax leader you were when you started out. You know how to transform your tax data into meaningful insights. And if you're anything like the other ambitious, future-thinking tax leaders out there, you've managed to do all of this with fewer resources and less budget. Maybe these tools still feel disconnected from one another. Not anymore. Introducing KPMG Digital Gateway, the single platform solution that gives you access to the full suite of KPMG tax and legal technologies you use. Across our global network, we are investing $5 billion over 5 years in technology, people, and innovation to accelerate the digital transformation of KPMG firms and our clients, and more than $1 billion in tax and legal technology specifically in that period. KPMG Digital Gateway puts the fruit of our investments at your fingertips, bringing together the expertise of alliances, technology solutions, and the KPMG global network of professionals into one integrated platform. Putting our investments in machine learning, deep analytics, visualizations, and AI technologies in one place, all driven by the rich data you already have on hand, powered by Microsoft Azure, built on the cloud. KPMG Digital Gateway and the teams behind the solutions are working together to help change the lives of tax leaders and their teams, redefining target operating models and transforming tax functions for the new world order. You've done so much already. Just imagine what the future of tax will be with a platform like this behind you.
Tax is being reimagined for today's world, a world that has changed dramatically. Geopolitical shifts, technological innovation, globalization, new business and consumer demands. These trends are transforming the way tax leaders are thinking about tax. And businesses tell us they spend more on annual tax compliance than on their annual audit. The old country-by-country, tax-by-tax approach no longer works. Businesses increasingly want a strategic relationship with a partner who can travel the journey with them to a new target operating model for their tax and finance functions. a model that is digital, global, efficient, and effective in unlocking strategic value. Welcome to Tax Reimagined, a new framework which brings together our tax knowledge and transformation skills, our leading technologies and our expertise in delivery across the world to meet the new demands businesses face. This is not a one-size-fits-all approach. It's about deploying skilled solution architects that can work with you to design, implement, and continuously improve the target operating model, and aligns your tax department's vision and strategy with the broader business objectives, from in-house automation to outsourced managed service solutions. This teamwork is a platform for reimagining the future of tax. KPMG is investing collectively and is committed to innovation and developing our suite of tax technology solutions, training 10,000 of our tax professionals to become experts in technology and solution architecture, building best-in-class regional delivery centers and consistent global delivery standards. By acting collectively and acting now, the future of tax is here.
Learn on the go and stay informed. Our goal is to keep the average user informed and up to date with relevant tax information. For the entrepreneur and investor, getting acquainted with tax laws and regulations could be quite daunting. Well, not anymore. Introducing the KPMG Tax Mobile App, where you can access all tax-related news, laws, and insights in one place. Also, calculating personal income taxes has never been quicker. To get the app, simply search for KPMG Nigeria Tax on Google Play Store or iOS Store and install. Once installed, quickly do a one-time sign-up on the application to access a constantly updated library of news, laws, and articles alongside easy-to-use tools. The KPMG Tax Mobile App has a minimalist design, making it effortless to use and navigate. What's more, if you can't find what you need, asking a professional is as fast as it gets. Let's walk you through the application. The full menu is accessible from the left and helps you jump to any part of the application in seconds. Access fresh tax news by clicking on the news icon. The seamless scroll makes it simple to view all news at a glance. You have news you've already seen and want to go back to, just search. Expand or share each news item to your friends with the dedicated buttons. Adjust your news preference easily from the settings icon and tailor your content. We have tax legislation and popular cases in our tax laws section. Are you eager to know more about taxation in Nigeria? More than enough for you. Stay on the cutting edge with insights features. The new app brings together alerts, newsletters, articles, and publications from industry-leading KPMG professionals. You don't have to worry about missing important regulatory dates and other notable events. The notable date feature brings them all into one place in a calendar or list, however you want to view them. For the average employee, entrepreneur, or business person, KPMG Tax App has another important feature, the PIT calculator. Plug and play, simple as it gets. Input the required numbers and calculate your taxes. Also, the app has jokes and valuable tips. Check in to learn something new and fun. Still feel there's more to know? We've got your back. Ask an expert and get quick, insightful responses from KPMG professionals when in doubt. Learn more from various authorities through recommended links in the External Links tab. Read all about us to find out more about KPMG's service offerings, our responsible tax principles, and disclaimer. It's now a breeze to connect with us online. Just click on the link icon on the homepage to get to us on social media. KPMG Tax App, connecting with you on the go.